A very good day to all our listeners. Hope you all had a fantastic weekend. A quick look around the market then. Firstly, starting off with the finish on Wall Street on Friday. Did manage to eke out gains around 0.5% in both the Dow and S&P. And in terms of corporate earnings, despite the ongoing fiscal cliff concerns, we have seen approximately 30% of SPOO's companies report thus far, with roughly 70% beating street estimates. So we have seen equity markets continuing to edge higher, the S&P managing to settle above the key 1500 level, and also the Dow looking to finish January with its best gains in around 20 years. Did feed through somewhat into some of the optimism in toward the open here in Europe, but firstly a quick look in Asia. We did have the Chinese industrial profit number at the weekend further cement the recovery of the Chinese economy, coming in stronger than their previous reading. And we've also had the PBOC Vice Governor come out and say it foresees around 8% growth for this year, as well as Standard Chartered upgrading their growth forecast for China in both 2013 and 2014. Slightly different story for the Japanese Nikkei. Early trade did see exporters really outperform on the back of dollar yen touching on fresh 2.5-year highs. We did see the Nikkei breach 11,000 briefly in the morning session. However, touted profit taking, having not been able to sustain the move above that level, was touted, and we did finish lower in Japan on the day. Taking a look into the European session, no real major economic data today, and in terms of equity markets, we're trading pretty mixed. Down around 0.1% lower for likes of the FTSE and the Euro stocks, but up marginally around 0.3 for the likes of the Italian stock market, led by Monte Paschi, who at the weekend got backing from the state for further aid to the bank, and as such has seen a bit of reversal from the aggressive sell-off that we saw last week. Elsewhere, we've had some attention paid to weekend commentary out of Davos from the soon-to-become in the summer Bank of England Governor Mark Carney, who's currently the head of the Canadian Central Bank. He's been particularly dovish in his tones and has prompted many to reprice their expectations of potentially the aggressive easing that may come from Carney when he takes power this summer. And as such, that has supported short sterling in the fixed income markets in the short end, and did also weigh in cable at the open. Elsewhere, taking a look in terms of Euribor, trades a little heavy this morning, down around 1 to 3 ticks or so. We did see a slightly higher 3-month Euribor fix at around 0.224%. This was up around 10 basis points from Friday's fix, but largely attributed to the large withdrawal of liquidity that we saw from that 137 billion euros that banks said they will repay to the ECB for those 3-year LTRO loans. Looking forward then, in terms of the US session, it does get a little bit more busy. We have some key economic data in the forms of durable goods and pending home sales. And we'll also get the first of the US Treasury's issuance in terms of 35 billion in the 2-year note to follow. That'll be at midday Chicago, so 6 p.m. London time. That pretty much concludes the opening wrap from me, so wish you all a fantastic trading day.